If you've been looking for a simple strategy to achieve financial freedom, then listen up because this is the video for you. In this video, I'm going to talk about our 2 properties to financial freedom idea, which can help you over the next 5 to 15 years go from where you are to having financial freedom and choices in your life. Because the reason we invest in property is to create a passive income stream for life, to spend more time with the people we care about, doing work we enjoy and having choices in our life, whether that's to travel more, to drop our kids at school, to take a day off work, to explore that business or that job or that relationship that you've been looking for, to move overseas if that's always been your dream, or to just sit back on a beach for a year and take some time for yourself, to train more, to travel more, to start that martial art or that class, that cooking class you've always wanted to do. Financial freedom is really just a vehicle to get choices sooner in your life. Now, the beautiful thing about this strategy, it is so bloody easy. There's 3 simple parts to it: the accumulation phase, the consolidation phase, and then the freedom phase. And each of the phases have different steps in them, which you can follow after watching this and implement into your own life, or actually work with me as your buyer's agent and I can help you set this strategy up. So after watching this video, if that's something that you like the idea of and you want to know more about, jump over to the website www.pumpedonproperty.com and let's book in a free strategy session and talk about where you are, where you want to be. And you can learn from my experience as someone who's bought 13 investment properties at the age of 34. Thank God I don't own them all now. I've sold a bunch of them, and over $250 million worth of property for my clients from all over the world who are looking to implement something like this or buy really high quality properties. Now, the first phase is super simple. It is called accumulation, and this is when we effectively buy the properties that are going to make us financially free in the future, because there's no point sitting there and going, I want to be financially free, how am I going to do it? But then failing to take the action or creating the income that's going to let you do that. Now, in the accumulation phase, there's 2 parts. The first part, which is part A, is when you go out there and you buy a home and build a granny flat. The second part is when you go out and buy a second home and build a second granny flat or tiny home. Now, depending on your financial position, if you're just starting out and you have sort of $60,000 to $100,000 of equity or cash, then it might mean just buying 1 home and building 1 granny flat. But for a lot of our clients that are earning great money, that have great equity and great savings, you might actually go out and buy 1 home in 1 year, 1 home the next year, and then the year after that, build the granny flats. We've even had clients that have bought 3 of these properties in 12 months and built the 3 granny flats on them as well. It really depends on your position, your risk profile, your financial desire to achieve this, and how quickly you want to implement it. And we can obviously support you to do that as our partner. Now, in this accumulation phase, it's really important to identify your goal. Now, the way that these properties look is, let's say we buy a $400,000 home, as well as a $125,000 granny flat, which gives you a total of $525,000. Now, we should be able to, on these properties, on the $400 home, get $380 per week of rent, and on the $125,000 tiny home or granny flat, get a further $300 a week in rent, which again gives you a total weekly rent return of $680 a week, plus the tax benefit on a $525,000 spend. Now, the beautiful thing about getting $680 a week of rent today is that over time, based on inflation, rents slowly increase in value. Now, $680 a week times 2.5% per annum for the next 15 years means that in 15 years' time, you're getting close to $1,000 per week by just picking up this 1 property. Now, that's so important, because if you've got 2 houses times $1,000 a week each times 50 weeks of the year, allowing for some vacancy, then we're getting very, very close to $100,000 a year of gross income from this strategy based on this scenario, which puts you in a position where you have amazing choices. Like imagine waking up tomorrow with 60 or 70 or 80 or $100,000 of income without having to get out of bed or go to work. That is what creates the choices in your life. Now, a lot of people say to me, well, hey, Ben, that's all well and good when I'm single or I'm young or I'm just getting started, or I don't run my own business where I'm used to making 200K or $1 million a year. But I want to go further than this. And that's why there's two parts to this accumulation. There's part A, which is setting up your baseline level of financial freedom, meaning you'll never be on the pension and you're setting up an insurance policy for your future. But then the second phase is what I call acceleration. Now, this is effectively where if you want to go further, you go further. Now, going further might mean buying more houses with granny flats. I personally own 4 houses and 4 granny flats, and I'm working to pay them off outright, which should give me about 150 to 200 grand a year of passive income 15 years from now if I can figure out a way to pay the bloody things off. Or alternatively, if you're happy with the 2 houses and the 2 granny flats, then you could start to do something different. You could buy your own dream home. I don't know why I'm drawing it out like that, but that's sort of to signify your dream home. You could potentially look at just buying single income properties that you hold for 5 or 10 years and then selling them for a profit. Or you could even do something more sophisticated at this time, like subdivisions, like development, or whatever it is that you want to do. You know, effectively the reason to accelerate is either to add more properties and more cash flow and more long-term wealth to your position, or to buy your own home that you want to live in with your family, knowing that you've set up financial freedom. Or if you want to do what I do, which is creating short chunks of cash over a 2 or a 5 or a 7 year period, and then reinvesting them back into paying off the debt faster, then that's an option for you as well. So just to recap that, the first stage is accumulation, where we buy the 2 houses and build the 2 granny flats and get that strong rental return. Then if you decide to, you can go to a second phase or part B of accumulation, which is acceleration, and that's where you take action to build more properties or to set up your family or to develop properties or hold them and then sell them to pay off the debt faster. Everything you do around here is extra and unnecessary, but I know a lot of you watching this will want to go further than 80 or 100 grand a year of passive income. So from the accumulation phase, we move into the consolidation phase. I can just see that I've spelt this completely wrong, and that's been up there for the whole time, so that's not going to get edited out, unfortunately, but I'll just fix that up now for all you guys online that have been looking at it going, this guy can't even spell. That's still wrong. Spelling was never my strong suit. Numbers have always been. So there we go, accumulation. Now the second phase of this journey is what I call consolidation. Now that is when you can continue to do what you're doing, or you can make a change in your life if you'd like to make a change. But ultimately this phase is all about paying off the debt on those properties that you accumulated in stage 1, so that you can get to the third stage of chilling out and having choices in the freedom part of the journey. Now, consolidation is quite simple. In consolidation, you really have a choice to make. You can either continue doing what you're doing, because there's so many people that we work with that are happy to work for the next 5 to 15 years or even longer than that want to continue to run their businesses or work in their jobs. There's plenty of people that are happy to continue working smart and reinvesting that active income that they're earning into their passive income stream, which is the properties they've bought. And if you're one of those people, that's cool. You know, not too much changes in the consolidation phase. You just continue working, continue raising your family, continue building your business or career, and you take that active income and convert it into a passive income. And then there's a second type of people that we work with that are people that want change, that are fed up with what they're doing, that don't like their business or their job, They don't want to continue to work as hard as they have been doing, and they want to create an immediate change in their lives. So they work in a focused way for 2 or 3 years to set up their 2 houses and 2 granny flats, and then they make a change. And that could be retraining, changing careers, going down to 4 days a week like I have to have much more lifestyle balance in my life. It could be to take a year off knowing that your properties are covering the costs on them because of the dual income. Or it could be to reinvent yourself, to get out of a business that you don't like and into a career or a new business that you really, really enjoy. Now, wherever you're at, whether it's continuing on or making a change, ultimately, you've still got this period of time where you've bought the properties with the income that is going to enable you to be free, but you haven't had enough time to pay off the debt. So let me now explain how in the consolidation phase, I pay off the debt. Now, there are some tips and tricks that you can use to pay off your debt significantly faster than the average person. Don't buy the hype that you have to wait 30 years to pay off a bloody property using principal and interest. There's so much better ways to do it. Now, the first way to do it is your simple principal and interest, because the property, and the beautiful thing about having a dual income property versus just a normal single income home is you're getting this extra passive income, which will actually cover most of the expenses on the property based on today's interest rates, as well as the principal component on the property. So once you've bought them and you're past the accumulation, then you can start to pay them off that way. Another thing that I do is I just commit to paying $100 a week on top of the principal and interest of each of the houses and the granny flats. Now, the reason I do this is that if you were to put this into a mortgage calculator, by paying the extra $100 off a week over the course of 15 years will dramatically reduce a 30-year loan by almost 5 to 7 years. It's insane how much time that can take off your long-term loan. The third thing that I do is I use the tax benefit. Now, when you build your nice little tiny home or granny flat, the beautiful thing about being an investor in Australia is the government says there's depreciation there, which is the value of the building that you've built declining over time, and we're going to give you a bit of money back. Now, what I've found on building a $120,000 granny flat is that for the first few years, even up to 5 years, you're almost getting $3,000 per year on top of your tax return back, not including any benefit on the house. If you decided to build brand new houses and granny flats, you'd be getting almost $10,000 per year tax for the first 3 to 5 years back, which if you own 2 of these properties would be $3,000 times 2, $6,000 a year. Or if you had 2 brand new ones, which is what I've done, you'd be getting almost $20,000 a year back at tax time. Now, instead of blowing that money like everyone does, use that tax benefit to pay off debt much faster as well. The fourth thing that I've always done is I've set up an offset account. Now, an offset account is super simple. Most of you watching this will already know what one is, but effectively for every dollar that you have in your offset account, it's $1 that you're not paying interest on your home loan. So let's just theoretically say that you had a home loan of $400,000, but you had $100,000 in the offset. If you take $100,000 off $400K, you've effectively got a home loan that you're only paying $300,000 of interest on. Now, that is a beautiful thing. What I do personally is I get my wage put in there, I get my income from my investment properties put in there, and effectively every dollar that I have in there is $1 that I'm saving. And you'd be shocked at, if you're disciplined and you're consistent with your saving, how quickly that offset will build up over a 5 to 15 year period of time. The fifth thing that I do is I reinvest my surplus. Now, what I mean by that is as you buy the home, the rent is going to be the lowest it's ever going to be, and the debt is going to be the highest it's ever going to be. So rather than taking that passive income of $100 or $300 a week from your property, depending on how much deposit you put down in cash or equity, and just spending it and wasting it like most people do, I just reinvest that surplus. So think about it this way. If over time you're reducing the debt on the property, but the rent's increasing, there's going to be more and more and more of a passive income created every single week the longer you hold that property. And each time you get that dollar, pump it back into the home loan or pump it back into the offset account, and that is going to dramatically speed up the process. Now, I believe if you do principal and interest, put $100 a week per property, reinvest the tax benefit into paying off debt, set up an offset account for your savings, and reinvest the surplus of the rent back into paying off debt, you can almost pay off the debt of one of these properties in 15 years. Now, if you're sitting there and going, holy shit, I had no idea I could do it, I thought I'd take 30 years to do this, then this is a simple way. Now, if you look at this, the property's covering the principal and interest, the government's giving you the tax benefit, the offset account is just saving money like you have been, and reinvesting the surplus is money that the property's creating. The only thing I've actually asked you to do to pay off your property in 15 years is put $100 a week of your own income into the property. Now, I don't care who you are, if you're earning 30 grand a year or $500,000 a year, you can find a way to put $100 a week or $200 a week towards your properties to get rid of the debt. Now, these are the basic things that you can do, and this is really just good money management, discipline, and consistency over time. But for those of you who would like to do this in a shorter period of time, like 5 years or 10 years, then there are more advanced things that I'll talk about on the next slide about how you can pay off the debt even faster. Now, what I talked about in the last slide was how to pay off the debt nice and slow, but what if you want to pay off the debt faster? You know, who doesn't want to pay it off faster? Seriously, who wants to wait 30 years or 25 years to get choices in their life to do what they're supposed to be doing? Because I believe every single one of us is on this planet to serve and have a big impact on the world in a positive way, whether that's just being a kind person to the people in your life, or whether that's educating and supporting the people around you through this type of information to change your life and their life for the better. I believe that the sooner you can have choices, the sooner you can do this. So there's all types of different ways that people do this. First way that I've done it is I buy extra properties. Now, I don't plan on holding these single income properties for the rest of my life, because why would I hold a property that's worth $500K that gives me $500 a week when I could hold a property that's worth $620,000 that gives me $800 a week? You know what I mean? But the reason I buy these types of properties is because it's a short-term play. Now, think about it this way. Imagine you bought one home in Sydney in 2011 and you held it until 2017. You gave it a quick renovation before you sold it and you made an easy 80% growth. Or that's kind of like buying a home in Brisbane right now, holding it until 2025 or 26 and then selling it for a nice little gain. I don't think the gain's going to be as strong as it was in Sydney or Melbourne in the last 10 years, but there is going to be money to be made there. Another way that you could do this, so let's just go back up here for 1 second actually before I jump into the second point and look at some numbers here. Now, if you were to just do this once, if you were to buy a property for $500,000, and you were to hold that property and that property grew by an average of 4.8% for 15 years, you would have a property now that is worth $1 million. Now that $1 million property, effectively because you paid off some debt on that property as well, after you sell it, after you pay taxes, might give you $300,000 over 15 years that you haven't had to work for. Now you take that $300,000 and you pay off the houses and the granny flats so much faster. Now imagine if you had two that each grew by 500K and you sold them and you had 600 grand after taxes, after holding costs over 15 years, and you could pay off your dream home by doing this. Another way to do this is through development. Now, development might be a subdivision, it might be a block of townhouses, it might be just through doing one really nice. These are more advanced, but also much higher risk strategies. I personally have decided that I don't really want to play around with development, because unless you're an engineer or a builder or a real estate agent that gets access to ridiculously priced property, it's just too much of a risky game. I'd personally prefer to buy one or two really good homes, ride the cycle up, time the buying well, sell them in 5, 10, 15 years whenever I can maximize that profit and then reinvest the money. But there are much faster ways. A third way is to just keep working smart. And, instead of paying just the $100 a week off each of those properties, like I mentioned in the previous slide, you actually pay much more than that. Now, I've got a client that I've just brought on who's saving $5,000 a week at the moment. I've got other clients that are saving $200 a week to $2,000 a week. Regardless of your financial position, with the right plan and the right budget and the right approach to this, if you want to keep working smart for maybe 10 years, then you can really redistribute that cash with all of the other things I talked about on the last slide, and you can pay off these properties so much faster. It's insane. Now, I've personally sold 8 of my 13 investment properties in the last 6 years, and I've used that money that I've made from those 8 properties to pay off my own home and some of these investment properties much, much faster than the average person. Remembering that most people don't even achieve this in a 50-year working career, and we're showing you a way to do it in 5 to 10 or 15 years from following this strategy. Now, the third and final part, once you've accumulated the properties and you've consolidated or paid off the debt, is the phase that I suppose most of us are working towards, and that is freedom. Now, freedom is this mystical, beautiful beast that doesn't actually exist. And trust me, as someone who's gone through this process, it isn't going to change your life overnight. You're going to be exactly the same person tomorrow, even if you've got 200 grand a year of passive income coming in, as you are today. The same fears you have, the same mindset you have is going to carry over. So while freedom is obviously the holy grail and what it is that we're ultimately all working towards, this is my holy grail. Here's my little jewels on it. This is horrible. Effectively, it is all about the journey to achieve financial freedom. Now, I have been a person that has been so goal orientated for the last 10 years to get myself into a strong financial position sooner in life so that I could have choices in life. But in reality, by being so goal orientated, I miss some of the beautiful parts of life on the way. So what I would say, if you're just starting out on this, or if you've got an existing portfolio but you want to change it over to this sort of way, is enjoy the journey. Make every day count, make every day meaningful, so that when you do achieve financial freedom, which you will through this strategy, you are the best version of yourself. You've been present every day on the journey, and that when you get to this point, it really is just the cherry on top of an already amazing life, as opposed to something that you're striving towards Gatsby style with that little green light and never actually realize, because you were already there and you could have already had the freedom in your mind to live the way that you want to live today. So I'm so grateful for being able to share this video with you, this content with you. I love this strategy. If I had have figured this out when I was first starting out, it would have completely changed my life. I've seen clients do this that we've worked with and implement this that are earning literally $60,000 per year. I've seen people that are earning millions of dollars a year do this. I've talked to people that figured out this strategy 15, 20 years before I did and have made it work in Sydney, where they bought beautiful houses for 400K back in the day, built granny flats for 120 grand. Now they've got houses worth $1.2 million that are renting for over $1,000 a week. And they're people that never earn over $110,000 per year. It is not what you earn. It is the quality of your plan, the quality of your team, and the consistency of your decisions over time that will completely shape and change your life. So you've got to give this video a thumbs up, man. Like, come on, subscribe to our channel, share this with someone who needs to see it. Reach out to us and don't be afraid to book in a strategy session. We can talk about where you are and where you're looking to go. Now, these strategy sessions are so limited because we're getting so many people reaching out about this strategy plus our buyer's agency. It really is for those of you who are in a financially ready position. That means at least $50,000 to $60,000 of cash or equity, and who are prepared to confront that fear and slowly learn, get educated, get a plan in place, and take action over time with us so that we can take you from where you are over the next 5 to 15 years to where you want to be and really start to live your life. Now, the fundamental reason for me and why I'm so passionate about property investing and why I'm so passionate about the work we do and the choices that you'll have in your life is when you no longer have to worry about money, you can actually become the best version of yourself. Now, I'm still not in that position, but I'm working on it financially. You know, this is a journey and it does take time, but when you have the choice to get up and do work you enjoy, to work less, to spend more time with your family, to train more, to educate and inspire the people around you, to lead your life by example and show up as your best self, to travel more, to share with the world the best version of who you are, to let go of that mindset of lack and fear and being scared and not becoming the best version of yourself and showing the world who that is just such a sad life from my perspective. So the sooner you can get financially free, I believe the sooner you can create choices, the better the world becomes, because I know how much of a better person I believe I am now, how much more of a values-based life I get to live now, because more money doesn't necessarily mean you become a worse person. More money means you can become a better person. It means that the person that you actually were gets to show up more and you get to live and inspire others the way that you want to live and inspire them. So I wish you all the best. This is so meaningful for me. We've helped so many people implement this strategy. It's an absolute winner. It's going to take time. It's not going to happen overnight, but nothing good does. And I can't wait to be a part of this journey with you. I wish you absolutely all the best. Please stay safe in this current environment and can't wait to catch you up when you're ready to talk about this with us. Cheers.